Want to make sure we're set up all right. So if you could hear me. Larry, hey, how are you? Thanks for being here. All you're going to see right now is, well, you're going to see a kind of a panel with an announcement of what we're going to talk about today. And behind it in the background is the NinjaTrader trading platform. So if I can get a thumbs up, a hello, appreciate the thumbs up though on YouTube. If I can get a hey or how are you? What's going on? Make sure that everybody's good to go, that I'm talking out loud and people could hear me okay. Husman, thank you. Husman says, hi, I can hear you. Deborah, hello. Husman, I had a good friend in college named Husman. That was like 40 years ago. I'm sure you're not the same guy. Alex, hello, thanks for being here. Rick, L. Larry, M.A. and B star. I call you B star? We're going to get started on time. It's 11:59, one more minute. It's going to be noon o'clock p.m. It's going to be 12 o'clock p.m. East Coast time, 11 o'clock. We had a lot of fun this morning in our session. Husman, yeah, he was a good guy. He was a good guy, Husman, for sure. So we're gonna, we're ready to get going here. It's right on time. For those of you who are new, let me introduce myself. My name is Jim Cagnina. I'm the Senior Education and Training Specialist for the NinjaTrader platform. And today we're going to go over top 5 indicators for new traders. I would amend the title to say Jim's favorite top 5 indicators, and they're not overly complicated. So that's probably a better title, but that's okay. I do want to remind everybody trading futures, options, and futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that could be an equation for opportunity, also equation for risk. So be careful. Only fund your futures trading account with risk capital. Everybody's unique and different in this world. We understand that. My personal definition, money I could afford to lose doesn't change my lifestyle or lengthen my retirement horizon or overly add to my stress, by the way. Easy on the day trade margins. Any questions on any of this stuff, type them in. Any question is fair game as long as it's trading related or it's family friendly. We'll keep it family friendly. All right, so what we're going to do, I'm going to create this is how I view technical analysis, right? So there's fundamental analysis, what's going on in the economy, what kind of economic releases are coming out, what's going on with the Federal Reserve, what's going on with all, earnings, all that stuff, right? And we're looking at the stock index futures right now. If we're looking at crude oil, we'd want to know what OPEC's doing, what the supply and demand is, are pipelines being opened or closed, what's the competitive landscape like with respect to alternatives and all that stuff. The other part of the deal, the other part of the equation is technical analysis, right? Using historic prices to kind of come up with trade ideas. And that's what we're going to focus on today. And we're going to create a chart from scratch that looks just like this. We're going to do it from scratch. So I'm going to go over the 5 things I look for. Feel free to type in questions at any time. We do have a couple of positions here that are going to clutter things up. So I'm going to flatten everything. We're going to start over. And we're good to go. All right, NinjaTrader, awesome software. We're going to be focusing on this. And we're going to be focusing on charts. So I'm going to open up a new chart. Excuse me, my bad sinuses today. Chart. We're just going to go ahead and add a E-mini S&P, right? E-mini S&P. And let's just go ahead. I'm going to start with a candlestick chart and a blank candlestick chart, right? Each one of these, each time frame, I have a 10-minute chart. Each candle kind of outlines what happened during each 10-minute increment on a going forward basis, right? And so the way a candle works, green means the price appreciated during that 10 minutes. Red means the price depreciated or went down during those 10 minutes. The bottom of the body on a green candle is where what the opening price was when the candle started, when the 10-minute period started, right? And then the top of the body of the candle, right, the top of the green, that's where when the 10-minute period ended, that was the price of the 10-minute period. The wick at the top, or the shadow at the top, some people refer to, that just shows you how high it went during that 10-minute period. And at the bottom, the wick at the bottom shows how low it went during that 10-minute period, right? And you might be familiar with other looks and feels of very similar, open, high, low, close would be really the same thing, except for the distance between the hashtags are filled in with a color body. That's all. And then you might also be familiar with line on close. This just charts the closing price every 10-minute increment at the end of the 10-minute increment without the highs and lows. We're going to start with a candlestick. This is kind of a regular, mainstay type of technical analysis. Japanese candle is called, and remember the Doji Rice Exchange from 1667 really started this type of analysis, which is amazing. It's so old, but in any event, that's what we're going to start with right away. Now, the first thing I want to add here, and I'm going to build this from scratch. And keep in mind, once you build your chart with NinjaTrader, and then you don't have to do it again, right? You can save it, and it's all good. So we're going to go through the slow, maybe a little bit painful process here of building it, but let's go ahead and do it. So the first thing I'm going to do is I'm going to add a moving average to create ultimately a moving average cross. I'm going to right click onto the chart. I'm going to click on the indicator option, and it's going to give me a panel with a whole bunch of available indicators in the upper left. And you can see there's a lot of most of these are customizable. There's a lot of different options here, and there's a lot of different types of moving averages also. I'm going to start with a simple moving average. It's called SMA, and I'm just going to double click on it, and it's going to shoot it down to the configured section. I'm going to highlight the configured section, and then I'm going to go to the right. I'm going to take a look. Period. It's 14. This is a 14 period moving average. What does that mean? Let me kind of just show you the equation. It's a real simple equation. And all we're doing is we're taking 14 periods of time, adding up the prices and dividing by how many periods. Just a simple moving average, just an average, right? Simple moving average. This last number here, A to the N, that's the actual candle that we're in right now, and it's not completed yet. It's moving around, right? It's kind of moving around, and it's being calculated every price as quick as possible. So that's the equation for that. It's really, really straightforward. There's exponential moving averages. There is an example. There's Wells Wilder, there's Hulls, there's double exponential, triple exponential, and the equations are all a little different, and they kind of weight the data differently, but we're going to keep it simple. And what I'm going to do is I'm going to create a slow moving average, and I'll explain what that means in a second. Period, I'm going to make it 26. And this is kind of my preferred a slow moving average for a 10-minute chart. And then set up, calculate on each tick. So every time the price changes, each tick, you can see on the black on the right-hand side here where the price is moving around, and it ticks up a quarter point, down a quarter point, which is the smallest price increment, and it'll calculate this moving average on the fly in real time. And so what I'm going to do also, I'm going to change the color because I know gold's not going to show up very well today. We could do Dodger blue. We could do regular blue, royal blue. I'm going to do navy blue. It'd be easier to see. I'm going to hit apply and OK, and it adds this kind of a smooth line, right? And what this shows is how this moving average changes. The moving average of the close price changes over time. And so that's kind of, and I'm calling it a slow moving average because I'm going to add a second moving average that's going to be faster. Again, same process. Right click, indicators, scroll down to SMA. Double click, and now I have a second instance added to my chart. And I'm going to highlight that second instance, and I'm going to change the period to 6. Okay, I'm going to change the period to 6. I'm going to show you it calculates on each tick, and then I'm going to change the color to red, reflect that it's fast. In other words, it only takes 6 pieces of data to calculate the moving average. So it's going to be less diluted, right? So it's going to move quicker. It's going to be more choppy. And you can see it's a little bit more choppy, and it's kind of crossing below the blue line, above the blue line, below the blue line. So it's called the fast moving average because it's using less data points to get the answer, right? And so any given data point is going to have a greater effect on the moving average, on a fast moving average, than it would have on the slow moving average. Everybody with me? Now, this kind of view is messed up. It doesn't help me. It's just kind of, it does help me, but it's kind of cluttered, right? So I'm going to unclutter it right now. I'm going to go back to my indicators. And for my slow moving average, I'm going to create a new panel. Because right now we're in panel 1. We only have one panel. I'm going to add a new panel, and I'm going to hit apply, and okay, and it creates a second panel. It's panel 2, and that panel 2 is now below. So there's my slow moving average, and you guessed it. I'm going to move my red, my fast, down below there also. Same thing. Indicators. Click on that. Click on the configured part of this window down here to get the fast moving average highlighted. And then I am going to simply go to my panel. But instead of creating a new panel again, that would create a third panel. I'm gonna notice, a second panel has been created, and that's what we just did. So I'm gonna put it on the second panel, and it'll overlap with the first moving average. And there you go. This is called a moving average cross, right? And what do we look for in a moving average cross? Well, there's a couple of different things that traders look for on a moving average cross, and one of them is a cross over, where the fast crosses over the slow, and a cross under, right? Those are crosses. And the idea on a cross is it's hey, historically, hey, price is changing, right? Price is changing. Like in this particular case, this would have been a really good indicator, right? So let me just kind of go one candle forward, and you can see once you got confirmation that the red was crossing over the dark blue, then the suggestion here is, hey, it's time to go long, right? And sure enough, this would have been a good indicator. But now keep in mind, these are lagging indicators, and they're not always good. Sometimes they're bad. Let's take a look at this next one here, where we crossed under, right? You wait for a candle, you got confirmation, and trader might say, hey, I'm going to go short because the fast moving average is going under the slow. In this particular case, your trade would not have worked out so well, depending on what your duration is, right? So it wasn't as good of an indicator. So when we put all this stuff together today, we add the 5 top indicators, then we kind of look for, consensus, right? We put them all together and say, what's reasonable and what's not reasonable. So any one of these as a standalone, in my experience, is you got to take it with a grain of salt, and you got to look at the whole field. Pratik asks, sorry. There's a Pratik. I'm botching your name. What's the difference between on every tick and on bar on close? Well, on bar on close, it won't move. Your moving average won't change until this bar that we're in is closed, right? We got 9 more minutes before this bar is closed or over with, and so this isn't going to move. When you put it, when you change it to on tick, it will move it in real time as the price of the market moves, right? So see how it just kind of ticked up a little bit and ticked down a little bit. It's more real time, right? You don't have to wait for this candle to close before you get to see the data adjustment. That's all that is. Now, what I like to look at is this idea of convergence or divergence, right? So, and the idea is, as the fast and the slow converge, it's suggesting a momentum shift in that direction. And we saw that here, right? From 3:30 on this morning, where the red is converging with the blue. It didn't cross, but it's converging, right? So momentum is going down. And then you can take a look at the same phenomenon, or at 10 o'clock today, where we have it not diverge, but diverge, right? So it's getting further apart, suggesting that the fast moving average is suggesting, as it diverges from the slow, is suggesting that prices are appreciating. So that's kind of how I kind of like to look at the moving average crosses is, are they converging or are they diverging, and how fast? And is that suggesting a momentum continuation move or a new move altogether? Pratik is on both chats. You are a miracle worker. All right, good. We already answered it. Can't ignore it. Oh, I see that other your other language there. Sorry. Okay. That's number one. Let's add an oscillator, right? What's an oscillator? There's all sorts of oscillators that you could choose from NinjaTrader. Some people like RSI, MACD, Tricks. There's the awesome oscillator, Chaikin oscillator, all sorts of different oscillators, money flow oscillator, McClellan oscillator. I don't even know what they all are, to be honest with you. But my oscillator choice is called CCI. It's short for the Commodity Channel Index, Commodity Channel Index. And let me just kind of show you that equation. It's a little more complicated. Now, most oscillators, again, it's a trend indicator between a high and a low band, right? We're oscillating between a high and a low band. And historically, the CCI measures overbought and oversold conditions. So when the CCI is over 100, and at least from a textbook point of view, the market's overbought. When it's under minus 100, then the market's oversold. And I'll tell you in a second why I don't subscribe to that, but that's kind of the idea. It's a momentum indicator again, and there's the equation. And the equation is based on typical price. And if you remember from your technical analysis days in school, you might remember this, but the typical price is basically just high plus low plus the close divided by 3. And so what the CCI does, you subtract the 20-minute simple moving average of the typical price, you divide it by this constant that somebody created, and you times the mean deviation, and then you get the CCI value. And it oscillates around a zero line, right? Oscillates around a zero line. And all the oscillators have different equations, and some of them react differently to different conditions. And this is the one that I found useful. And I don't want to suggest for a second that this is better than any of the other ones, but this is the one I like. So I'm going to go ahead and change my period to 20. Default was set at 14, but I like 20, and that's consistent with the way I have it calculated here, 20 period. That's more of a textbook application, I think, so we're going to keep it that way. And then what else am I going to do? Change calculate to on each tick. And then I want to kind of highlight some of the lines, right? I want to highlight the zero line. I want to make the zero line red so we can see when it crosses the zero line. I think that's kind of important. And we'll change the width to 2 for that zero line. The minus 100 level we talked about, we'll make it a little bit darker. Maybe we'll make it a navy, and we'll apply that. And then the positive, where's my positive 100? Is up here, level 1. And again, we'll make that navy as well, so we can see it a little bit better. And we'll keep this, keep the CCI solid at gold for now. Maybe we'll change it to see it better. Let's hit apply and okay. And it added a third panel, right? So I got panel 1, I got panel 2, I got panel 3. And then let's just expand it higher up here so we can see it a little better. And there it is. See, it's the gold. It's oscillating up and down, up and down, up and down. Red is the zero line. 100 is that mystical overbought. Minus 100 is the mystical oversold. But what I like to see in the CCI is the velocity at which, or the slope, how velocity or how extreme the slope is, and how quickly it crosses underneath the 100, how quickly it crosses under the 0, how quickly it crosses, if it does, the minus 100. So this velocity kind of tells me that direction is going to start changing, right? That direction is going to start changing, and gives me an idea of what to think about in terms of momentum, right? Patrick asks, Patrick, it might be better to use ticks instead of on bar close, for sure. Absolutely. So let's take a look at this particular one. So right here, we crossed over the zero line, 940 to 950 candle, right there. We have confirmation at the 940 to 9, when the 950, at 950, when this candle closed, we have confirmation that we have a crossover, right? So we went from a negative state to a positive state, and the slope was pretty good, right? Pretty steep, telling us momentum's going in that direction. Then we had the moving average crossover, kind of confirming this idea that maybe there's a position to go long into, but again, it didn't work out that way, right? So sometimes these signals are false, sometimes they're not. Let's take a look at what's happening now. Right now, what this is telling me is, hey, we're crossing below zero. We're only at minus 18.96, not that big of a move yet, but we did cross under. So now I want to start looking. The moving average cross is starting to converge. This could be a signal to go short, right? So this could be a signal to go short. So those are just 2 of the 3 of the 5 tools we're going to use, and that's how we would use them, right? Looking for this area. And this was a pretty good slope downward here from 10 o'clock down to where we're at now, and that's kind of reflected in, the candles are pretty big, but that's kind of reflected in the overall closes of these candles, which are relatively negative. Okay, so that's number 2. Number 3 is really where the rubber meets the road in futures trading, because you can't really get number 3 anywhere else. Anywhere else that's meaningful, and it's called volume profile. I'm going to right click and I'm going to add my indicators again, and I'm going to look for something called order flow volume profile. There it is, order flow volume profile. Double click on it. I'm going to add it to my configuration. So again, on each tick, E-mini 10-minute chart, this is all good. I'm going to change. I'm going to come back and change this ticks per level, but I'm going to keep it at 1 right now just to kind of make a point. And then I'm going to go ahead down here and click show volume labels all the way at the bottom. Everything else is more or less cosmetic on what lines you want to show and how you want to look at it, but I keep everything the same. This value area percent, I would not change that. That's 1 standard deviation worth of volume, 68. So I'm going to keep it there. I'm going to apply and okay, and it's going to add this volume profile on the left of the chart. I could put it on the right of the chart. I could change the colors. I could do all that stuff. Okay, and what these histogram bars are, these just show how much volume is traded at any given price. That's all this shows. And I started it 23 hours ago, or not 23 hours ago. I started it when the market opened up last night. Remember, these are 23-hour markets. And just is showing me, exactly how much volume is traded at any given. And remember, I set the tick size to 1. And let's take a look at what that means, because I told you we were going to change it. Let me just kind of zoom in a little bit more. And let me kind of move this over. So as an example, the prices we're trading at right now, this particular price point, 67 3/4, the volume that's traded at that price is 7,438. Right, and we're trading right above it right now. We're trading at it right now, right? And so you can see volume is accumulating, making this histogram bar longer at this particular price. So these numbers are dynamic. They change as traders, as transactions happen at any given price throughout the day, and it gives you a profile of price happiness, right? It gives you a profile of where throughout the course of the day the market buyers and sellers agreed to trade at a certain price more times than other times, right? And it's kind of, where's the equilibrium in the market? Now, it's not always a really pretty distribution, right? Sometimes it's bell-shaped or Gaussian. Sometimes it's a double distribution. You'll have one peak at the top and one peak at the bottom. It would be like a B distribution. Sometimes you'll have just a big bias to the top of the distribution. It'll be a P distribution, or then one big peak at the bottom, right? That would be a B, small case B. So this gives us a lot of information. The dark area here is called the value area. It's 1 standard deviation worth of volume around that median, and that's that 68 number we talked about. So it's the value area. The light blue on the top is called, well, believe it or not, prices above value. I know, not very creative, whoever named that one. And then the light blue below the value area, and you guessed it, prices below value. So what I'm going to do though is I'm going to change the height of the histogram bar so I can see it a little bit better. So I'm going to go back into the indicators. I'm going to highlight order flow volume profile. And then I'm going to change ticks per level. We'll just change it to 2. And so now the height of each histogram is going to cover the volume associated with 2 ticks instead of 1, right? So this will be 2 ticks, 72, 75, and 70 and 73, right? This golden line here, that's the point of control. And there's nothing magical about the point of control other than the fact that it is the longest histogram bar, right? It's where volume traded the most during that day. And this is a pretty nice kind of a view of this bar. It is dynamic. Other times, other prices trade more later on in the day, and the gold line could shift to a different area. The value area could shift to a different area also. So keep that in mind too. It's very dynamic and it's just tracking volume. There's no magical equation. I don't have a PowerPoint slide on the equation. Yeah, so Gary, I just changed, all I did was, again, I just changed my tick size to 2. I changed my data to on each tick, and I added the value of the actual volume number in the bar itself. Now, how would you use this? Well, some traders might say, especially in a normal distribution day, that the point of control is kind of attractive place for this market to end up. Therefore, maybe I want to buy a contract at the bottom of the value area and try to sell it back up at the point of control, or I want to sell a contract at the top of the value area or buy it back at, at the point of control. And these are just general theories, right? This isn't actually, again, there's not one rule that says if this happens, then this happens, because we look at all 3 of these things in unison. Okay, so that's number 3. We're going to add number 4. And I'm going to go again to indicators, and this isn't really an indicator, but it's in the indicator section, and it's called prior days open, high, low, close. And I'm going to highlight it, double click it, bring it down here, select it so it's selected, and it's going to show me. It gives me the opportunity to show the close price from the previous day, prior day, the high, the low, and the open. And I'm not so much interested in the open yesterday, but I am interested in the close, the high, and the low. This is yesterday's data, so it doesn't matter if you change it on bar to close or not, because it's already done. This data is in the books. And so the open will be, the high will be a green hashtag, the low will show a red hashtag, prior will show a purple hashtag. The prior close will show a purple hashtag. I'm going to hit apply and OK. And you can see it on the chart here, right? It's painted it on the chart. Real handily. It gives me yesterday's low. It gives me yesterday's close. Yesterday's high is above the screen here. We can't see it. So those are areas of interest for me. Those are definitely areas of interest for me, which will kind of give me some idea of some type of entry, exit, stop loss level, those kind of things. Once we get to that part. All right. So 5th and final, last thing I promise. Is Fibonacci retracement. Again, not really an indicator, but it is. So I'm going to go ahead in my drawing tools this time. I don't right click on my desktop and open up indicators. I go drawing tools, Fibonacci, and I turn it on alongside my crosshairs. And you're going to pick an A to B, a high to low or a low to high. In this particular case, I'm going to pick a low to high and see what the retracement of this move looks like. Sorry, guys, let me just click once, drag it up to my high, my contemporary high, right? So here's a swing A to B. I'm just looking at that segment for my fib. I'm not going all the way up to here. Otherwise, I would go high to low. But now I want to go low to high because that was the recent swing up. And now the market's kind of is moving back down, and you'll see a series of numbers on the right-hand side, right? So these series of numbers are based on the Fibonacci sequence, right? And if you remember from math class, again, Fibonacci sequence is you take 0 and 1, you add them together, you get a 1. You take 1 and add it to the previous number, which is a 1, you get a 2. You take 2 and add it to the previous number, you get, which is a 1, you get a 3. 3 plus 2, 5. 5 plus 3, 8. 8 plus 5, 13, 13 plus 8, 21, and so on and so forth forever, right? That's a sequence. And this is a mathematical nature-based sequence that you see in seashells and human body proportions and all sorts of stuff. And the odd thing is that traders have adopted this as, and maybe there's a self-fulfilling prophecy here, but traders have adopted this as a technique to establish, again, more points of interest and areas where price tends to gravitate to. And where the numbers come up, 23.6, 38.2, and 61.8, is when you start dividing the sequence numbers against each other, no matter how far you go out, when you start dividing these numbers against each other, you come up with these ratios. 38.2 keeps coming up, 61.8 keeps coming up, 23.6 keeps coming up. And there's other numbers, right? There's 161, and but we're going to focus on the range here in the middle. The 50% has just kind of been added as a halfway point, and again, it has this kind of mystical, area of prophecy where it kind of, so many people are using it that oftentimes supply and demand are formed or price targets are targeted to these price levels. So it gives us another area of interest, and just kind of lining up things. The 61.8% is just a little bit south of the bottom of the value area. So this is giving me an area of interest right here, right? It's giving me an area of interest right here. CCI is negative right now, so I'm going to wait to see what happens here in a second. But the market has, and the reason it's called a retracement is we went from low to high, and the market kind of came back down. It hit the 23, the 36, the 50, the 61. It's retracing. And then the idea is the trend is going to resume back to the upside. Now, that might not happen. It may happen. It might not happen. We don't know for sure. Sorry, Rich, I just saw that comment. Chris says, hello, is anybody from Astor, Florida? That's, I don't know. That's a good question. I am not. But anyway, so these are actionable kind of trade ideas. And the idea here is if we start closing below the 61.8% level, then this is no longer a retracement. The trend has changed. The direction has changed. Once we get candles that are closed below the 61.8, we haven't got it yet, and this candle just about touched it, which is amazing to me. And that's where we're at right now. So a trade idea might be something like this. Although these two indicators don't really help me with that, since the moving average cross is exactly touching right now. The CCI is kind of negative right now, so I'd be a little bit hesitant to actually buy a contract here at this 61.8% level. But maybe I would be more interested to sell a contract at the 50% or sell a contract at the 38.2%. And, I'm just going to do it from the chart just to kind of show you what it would look like. Just to right click. Oops. Do I have my chart trader on? Let's make sure I have my chart trader turned on. I am going to hide it. Chart trader hidden. See at the top, it looks like a egg beater, old-fashioned egg beater. Click it on there. And then we're going to go ahead and, we're right there at the 50% line right now. And oops, what is going on? Oh, you know what I don't have? Also my account set. Sorry, hang on, almost there. I got to put an account in here. Let's just go sim account 1. We're going to hide it again. And we're going to right click and throw an order in there right now. All right, so we threw an order in, and a little bit below the 50%. Maybe I missed it by a tick or two, but now we're short one contract, and that's color coded red, so you can see that we're short one contract. And my idea here is, hey, I'm going to use that 50%. I want to see if we continue to retrace to the point where the direction has changed, and I use that 50% as an indicator. The CCI was negative, which confirmed this might be a good idea. You never know. And the moving average cross has completely converged, right? It hasn't crossed under yet. We could kind of expand it, but it looks like it's heading down that way, right? It looks like it's heading down that way. So this is a good thing. And so now one might ask, okay, well, Jim, where would you then put your stop loss, and where would you put your target, which are valid questions, right? So let's talk about profit target first. I'm going to use yesterday's close as a target. Let's see if we can get to yesterday's close, or maybe a tick above it, right? And so we're going to go ahead and try to buy it down here. And remember, the idea is Remember, the idea is I'm selling high. You could do that in futures. There's no uptick rule. You don't have to worry about, there's no pattern day trade rule. And you could do it. And that's what I just did. Now, the other side of the trade is, hey, Jim, where do you want to put your stop loss? And I know I'm kind of going against the idea that this point of control acts like a magnet right now. So if with having that in mind, I want to be relatively tight on the stop, right? Relatively tight on the stop. And then I want to use the wick of this previous candle here and say, I want to be above that wick, which corresponds to 38.2%, which is nice. So I'm just going to kind of right click right above it. And I'm going to put a buy market stop. So that's the anatomy of a trade setup that we came up with these 5 indicators. Maybe they're good, maybe they're bad. I don't know. We'll just kind of play it out and see what happens. Alternatively, we could have done a trade on the other side, right? We could have done a long trade where we're like, all right, let's buy at the 61.8%. We'll put our stop below where I have my target, and then everything's the opposite, right? We'll try to sell it higher. So it just depends on a couple of things: how you look at the other indicators, what's your overall daily bias. My daily bias was bullish coming into the day because I looked at a daily chart, and there seemed a lot of green in the daily chart, but we had some relatively negative CPI numbers that were confirmed this morning from the Bureau of Labor Statistics. So my bullish sentiment today went to kind of neutral, and we'll just kind of look for trade ideas as we go. All right. Sorry, I've been talking nonstop. How are we doing? Anybody have any questions? Any ideas? I appreciate the thumbs up on YouTube, by the way. Super cool. Thank you for that. Feel free to do it again. And how do I know my bias is bullish? All right, let me show you that. Let's see if I have it on here still from this morning. Yeah. All right. So I'm just going to go ahead and open up a daily chart. Now, these aren't 10-minute candles anymore. These candles are weekly, but I'm going to change it to daily. Really easy to do with the NinjaTrader software. And this shows you just, a daily chart, right? Each candle is a daily chart instead of a 10-minute chart. Again, green means price is going up, red means price is going down. And it's, pretty clear to me that it doesn't, no offense, but it doesn't take a rocket scientist to see that we're trending upward, right? The trend is up, the trend is positive, right? So I'm gonna just draw a trend channel here. It's kind of real rough channel. It's not gonna be perfect, but just so you get the idea, right? We're kind of, prices are moving along up this channel right now. And until I have reason to believe that something else is going to happen, I'm looking to see if we could, today we're finally have a candle, below the channel I just drew. So we'll keep an eye on that. If we start having 1 or 2 closes below this channel, then maybe the bullish market is going to slow down. I don't know. But since the 11th was that September? Yeah, no, this is November, October. 11th, 12th, 13th of October. We've been in bull mode right there. The other line I might draw here would be a horizontal line, just to kind of show where I would envision support, and I would do that to envision support. And really, because this was an all-time high here, and we tried to close above it several times, couldn't. So this area of resistance. I said it backward. This area of resistance now becomes an area of support in a long-term chart basis. Again, you could do Fibonacci on this as well, but this is how I develop my bias every morning. I look at this chart, regardless of whatever the market is. We have crude oil, we have the micro NASDAQ, we have treasury bonds, and the daily charts really kind of give you, daily and even weekly, give you a good sense of what's going on, because in these marketplaces, there's participants that aren't just day trading, right? There's commercial establishments, there's institutional, there's hedge funds, there's all sorts of different types of market participants that have different time horizons and different motivations for participating in the markets, so that the long-term trend is a good thing to look at. Okay, so what determines low to high or high to low for the fibs? That's a great question, because it really is it's a little bit of an art, right? A little bit of an art. And what I did was I started this whole thing when the cash market opened up. I identified this low here where my candlestick is right here. It's the 840 to 850 bar. And that's where I started my fib. I might be off a tick or so if you kind of look at it, but this is where I started it. This is point A. And then I looked for the high. And the high was right here. That's point B. That was at 1020. So the trend was up during that period of time. And I want to see a retracement back down to give me some fib numbers. Another way of doing it would have been, hey, I want to go the high of the day to the low of the day. And let's go ahead and do that. We could have two fibs at the same time. Why not? Fibs are free on NinjaTrader. Let's do it. High to low. So pretty much the same. And it gives us fib lines also, right? But it's in reverse, right? Because we went A to B, high to low, and then it gives us these numbers also in reverse. So the reason though I chose the more contemporary one is simple. It's because if I would have used the longer one, we went high to low, and then we constantly closed over that 23.6% number, which is equivalent to the 61.8 if it was upside down. And actually it's over here. Because we continually closed above it, the trend, it wasn't retracing anymore. The trend direction changed. So that's why I wouldn't use this one anymore. I don't think it's valid, but some people might. That's all. That was my logic behind doing it. And there is a little bit of a science to it. Someone might want to say, well, I want to even drill in deeper. I'm going to drill in deeper, Jim. I was like, all right, let's do it. So I'm going to go Fibonacci retracement, and I'm going to pick the high and say, okay, here's my point A. And the low is where we just, the candle before last. And at the risk of cluttering my chart terminally, I have another fib over here on the side. Move it up here a little bit. And I'm saying, hey, I just want to keep track of prices from here, A to B. And then maybe if we retrace back up to 23, then sell a contract kind of idea. So you could pick whichever range you're interested in and say, hey, what is reasonable? Is it reasonable that we could span this whole range today? Is it yes or no? And, in my opinion, it is, but it's a little bit of an art and a little bit of a science. Okay, what determined to draw low to high or high to low? We just talked about that. And 61.8, we could have gone long. Exactly, you're exactly right. And so, the idea here of going short at this level, we could have went long here, right? That's another trade idea. It's just a different trade idea. That's all. And it's a personal preference, and you're thinking right. That's how you use these lines in these areas. The reason I decided short was because the moving average cross has completely converged, and then the CCI is weak, right? So that gave me the idea that, hey, I want to be short. I don't want to be long. Waykar asks, do you have a trading course? This is it. But if you go to the NinjaTrader platform training page, there's a bunch of events, and we do live trading. We do trade setup ideas Tuesday, Wednesday, Thursdays, and we do various other classes throughout the week, and with people, other folks, that are arguably a lot smarter than I am. I also do a lot of these events as well. But go to that NinjaTrader training page, and maybe Isabella can cut and paste that in. They'll link into everybody's chat box. We got a couple different chat boxes going, and just kind of follow that page, and you'll know what we're doing at NinjaTrader, and it's particularly what I'm doing. And pretty much every day I'm doing something like this. So maybe one day thank you, Isabella. Sweet. All right. She did it in the Zoom side. She'll shoot over to YouTube and Facebook. All right. So any questions, ideas, suggestions, hopes, dreams, love? Type them in. Be happy to talk to you about them. It's 12:42 right now. So we covered the main indicators. And remember, stuff like the oscillator, the CCI, you might prefer RSI or MACD or one of the other popular ones. There's a lot of them. lot of textbook ones that are pretty good. With respect to the moving average crosses, the 6 and 26 are just my preference on a 10-minute chart based on, my experience and observations. You might come up with different numbers. You might come up with 30 and 15 or whatever it is, right? And I would encourage you to experiment and get good with that. So now we're encroaching on our. Let me just show you the trading ladder if I could get it there fast enough. We're getting close to our trade fulfillment here. And let me get my right account in there. There we go. So here's this on the trading ladder. We're one tick away from our target. And you could, okay, so we're able to actually get that filled. What I wanted to show you is everything is in sequence here. And synced, right? So here's my stop. My stop is still in the chart. We got to cancel this. I'll go ahead and click on this X to cancel it. It'll cancel on both sides. These two things are in sync. So if you want to trade from a Superdome, that's great. If you want to trade from the chart the way I did, that's great also. Okay. So it turned out going short worked out. Again, we're in real-time sim account, so don't get too overly excited. But the data is real-time, so it gives us a good experience. Which dotted lines, Jim? Jim asked, what do the dotted lines represent? The hashtag dotted lines, that's yesterday's information. So that red is yesterday's closing price or low, the low of yesterday. We're right at the low of yesterday. And then this blue line here is yesterday's close, the price we closed at yesterday, this hash line. These other extensions are just the top of the value areas, the really light dotted dot, dot, dot. The golden line is just an extension line from the volume profile point of control. And the light blue dotted line at the bottom is just the bottom of the value area. It's just kind of a visual aid to help see what's going on. So I do think that. I think the CCI combined with the moving average cross, combined with the volume, I think all of these things together and I think it's relatively simple, right? I don't have too much stuff on the page, and I think it's relatively straightforward. So I like to keep it clean and simple. This keeps it clean and simple for me. Placing orders on the chart keeps it easier for me to visualize. And this is my setup, and I've been involved in this business. Well, I hate to say it out loud, but for decades. Unfortunately, the CCI period I said is 20. You are absolutely correct, and you can see it down here too, right? It shows you CCI December 21st contract, 10-minute chart, and then comma 20, right? Comma 20. So the software is really good at showing you exactly what you want to do. And if you want to change this to histogram bars instead of a line, it's easy to do. Let's just go to indicators. I'll show you how to do that. CCI, I'm going to highlight it. And then on the left-hand side, I'm going to expand the CCI little caret. And we'll go to bar instead of line, right? We'll go to bar instead of line, hit apply, and I'll make the width 5 instead of 1. And now we've made the CCI histogram bars instead of a line. So the NinjaTrader software is great at customizing your look and feel, your colors, and the actual indicator itself, right? Maybe you're going to decide that the CCI is better set at 30 instead of 20. I don't know. Just making something up. Okay. Jim, did I get that right? Was that the question? Good. All right. Well, I think we're close to wrapping it up today. Follow that platform trading link if you're interested in more events. We do different things. And then I think next week's schedule will probably be posted probably by Friday of this week. And I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. You have a high combination of leverage and volatility, which can be an equation for opportunity, also an equation for risk. So be careful. Easy on the day trade margins. You get a lot of leverage already in futures without them. And they're there as a convenience for you as you go through this, go through your process. All right, go. Any last second questions? Yes, there is. You could TY. Yes, you could add Ikamuchi Cloud, which I was never very good at figuring out how to use it, but absolutely, it's available on NinjaTrader platform. We don't have really time to cover it today. And Pratik asked, what time frame is more accurate? Well, each time frame is exactly accurate. I'm not sure the question. The reason I have a 10-minute, maybe I'll explain it this way. The reason I have a 10-minute is I want to think of it in terms of my trade duration, right? In my mind, a 10-minute chart analysis, I want to look for a trade idea that's going to happen within 60 minutes. I have a 6 times ratio. If I'm looking at a 5-minute chart, then I want this trade to happen in 30 minutes, which means everything's going to be tighter. My profit target's going to be tighter. My stop's going to be tighter. And in my opinion, my risk is going to be more. So a 10-minute gives me that 1 hour window of opportunity. Now, sometimes you're in a trade more than 1 hour based on your 10-minute trade analysis, but it's kind of a general framework that I like to think about. Rich, you're welcome. Lee, any chance to talk about risk-reward ratio? Yeah, this is a constant thorn in my side because it's difficult to talk about. It's difficult to talk about. So I think what Lee's asking is, hey, how do you know your risk-reward ratio is okay when you place a trade? In other words, how far is your profit target? How far is your stop? And is there a certain ratio or percent that's good or bad? And I might be an outlier on this, I'll admit, but my opinion is place your targets and your stops based on the probability of the trade setup, based on what the candles are telling you. And it might not be a 1-to-1, 2-to-1, 3-to-1 ratio. Your profit target might be 8 ticks, your stop might be 10 ticks. And I think that's okay if you're scientifically placing them. And let's kind of see if I can come up with an example here real quick. Here. All right. So, right now, again, we're looking at, this is tough. This is a tough place to put an example, but moving average cross is diverging. CCI is negative pretty big. We're getting down. We're way past the 61.8. So as an example, let's say I wanted to sell a contract at yesterday's close price. And then I want to place my stop loss at the point of control, right? So this will be a buy stop. That's a lot of risk. That's 10 handles. That's $500 a contract, right? And then let's say I wanted to put my target. I want to see if we could approach the lows of the day, right? So my target is here, right? And this is only a 5 handle. One might say that this risk reward ratio is out of whack, and I would say it's only out of whack if your profit target and your stop aren't scientifically set at the right places. And this is a bad example to give you, Lee, because literally I wouldn't put a stop here for sure, right? I would probably bring it down closer to the 50% after I align it up with the volume profile. See, I see a big node there, which is a point of interest. Whenever you see these big histogram bars in the middle of nowhere, there are areas of interest. So I'd probably, in theory, so I probably would bring this down to the right below the 50% retracement level in reality. So this wouldn't be realistic for me, but I'm just trying to make a point, really, is what I'm trying to do. And I don't think I did it very, very well. But so there's the trade setup now, and you could even see that we're a little bit, we're risking 5 handles to make 5. So there's symmetry on this one, but I wouldn't use that as a regular rule of thumb. I want to look at the candles in particular. Right now our stop is way above the high of this candle. We have a series of lower highs, lower high, lower high, lower high, lower high. Very, very bearish. Lower lows, a little bit of a hiccup, lower lows. And so whatever this candle does next is going to be kind of important, I think, from a follow-through point of view. And if we end up with a red candle down here, we're going to see, potentially, at least I think, we're going to see some more continuation, which makes our profit target reasonable. way down here. Alternatively, on the upside, if we start making a higher high, then I probably went out because it was probably a bad trade decision. So I'd probably even make this, I don't know, I'm going to say 3 or 4 ticks above, which is kind of where I'm at right now with my stop. So I'm happy with where my stop is. So I'm going to keep my hands off the mouse and stop talking and shut up. And Lee, we'll explain this. We'll explore this idea more and more Tuesday, Wednesday, Thursday events next week for the S&P live trade setups. But I appreciate the question. I really do. All right, guys. I think we're in good shape. Again, thanks for coming. Greatly appreciate you being here. Easy on day trade margins. We already talked about that. And let me leave you with this. Be safe out there and be good to each other. Take care.